Hello, Darin. Welcome to the show. Let's get rolling by giving us a brief background about your investing experience and what assets you're in today.
Hey, Joe, appreciate you having me on the show. I'm looking forward to it. A little background on my investments. I've grew up going through the corporate kind of ranks and in different capacities as CPA, sales, and put money aside and put it into stocks and ETFs, et cetera. And that was traditionally all my investments were stock related until about 3 years ago when I got involved in real estate. And in terms of real estate holdings, I've invested both passively. I've been a key principal on a number of deals, and I've also been a lead sponsor in a syndication deal as well. So I'm invested in over 4,000 multifamily units, and I wish I had started real estate investing a lot earlier. So that's the get started.
Well, I think everybody, based on how well the market has performed over the last 5 or 8 years, everyone probably didn't see the opportunity that was coming in the last decade, back in 2010, and only a select few actually were purchasing. So I think a lot of people are probably kicking themselves in the butt for not buying more over the last 5 years.
Yeah, I would agree with that. I think that for me, so I have another business that I've been in since 2002, loan trading between banks, single family, multifamily, and commercial real estate loans, larger loan portfolios, bank to bank. And, I've seen the asset class for years, and I guess I just let fear get in the way of me actually getting into the market, and combination of fear and also focus on, growing my business versus, getting into something new. But real estate can be really intimidating, to get into right off the get-go. And I believe surrounding yourself with a lot of other like-minded people can really help give you the confidence to, take the next step forward.
Do you think the perception of multifamily commercial assets in the past was more institutional and not accessible to the Main Street investors, and that's maybe why people didn't look at it so much?
I think that's definitely one reason. I've been in the space for a long time, and I didn't know about syndication until 3 years ago. And that's, I guess, one of the reasons why I started the podcast, and one of the reasons why I love this industry is that we need to get the word out to more and more people. Like, once you're in the little bubble of multifamily investing, you hear about it and you get access to deals all the time. But if you're not in that bubble, then you don't even know that you have that opportunity. And I think that that's a big thing, is that, it's not written in the press, and I don't know why. I mean, it's not I read the Wall Street Journal since I graduated college, and I never remember reading an article about syndication, right? And, a lot of other financial, news magazines, and, I was just never exposed to it. In addition to that, I've been involved with, a lot of different golf clubs and been around a lot of wealthy people, and I've never, until I got involved 3 years ago, I was never offered the ability to invest in a private placement deal.
So where was the first opportunity? It was mentioned.
Say that again?
Where were you first introduced to multifamily or first heard about it?
So, I saw the advantages of it when I was in the trading space. I would see, the investors, and I would see the underwriting, and I would see tax returns and people that had, assets of 20, 25 million and paying like no taxes because they had depreciation that was, offsetting their income. And so that was one thing I saw, but it was really 3 years ago when I finally decided, okay, my business was running efficiently. I had some excess time. I just decided I'm going to do it. And so I went and bought a new construction duplex, and, that got me in the game. I knew that once I signed that contract, look, I'm not going to make a ton of money on this, and it's going to take forever going from duplex to fourplex. So I wanted to go faster, go bigger. And so I went searching for a way to do that. And I found a multifamily mentorship group based here in Dallas, Brad Sumrock group. And I joined that group December of 2017. And that's when I started getting exposed to all these other people that had purchased 100 plus unit, 150 plus unit deals. And so I was amazed by it. And like you said in the beginning, I thought that all those larger properties were institutionally bought, but they were really bought by a syndication, which is just a group of people coming together to buy an asset they couldn't buy on their own.
So were you able to leverage that group and kind of use them as your mentor and coach through doing your first acquisition deals and investment deals?
Yeah, absolutely. In a lot of different areas. So some people said to me, Darin, man, why are you spending the money to join this group when you've been in the multifamily trading space for years and years and years? And yes, that's true. I understood the asset class. I understood underwriting. I understood the lingo, but I had never purchased a large multifamily community. And, so there were certain things that I needed to fill in the gaps and also just get over the fear. So getting to know other people and say, well, how do you get comfortable that you're not buying an asset that has a lot of structural issues? I'm not an engineer. I'm a business guy. And so, I just heard one after the other, like, that's no problem, man. You just hire these guys and they go out and they do the inspection. They bring a plumbing guy, they bring an electrician guy, they bring a roofing guy, they bring, foundation guy, and they come back with a report to tell you, what the assessment is on that property. So you know what you're getting into. So something that was holding me back, it was an easy answer, an easy solution, but talking to other people that had done it kind of pointed me in the right direction. The other thing is, and you'll hear it over and over and over again in the multifamily space, is that, multifamily is a team sport, and that, there's a lot of people involved in getting a deal done. And that's very true. And what I was able to do was leverage all these other syndicators that had done 2, 3, 4 deals and ask them, who'd you use for property management company? Who'd you use for an attorney? Who'd you use for inspection? And so there was a common theme, everybody kind of used the same 2, 3, 4 people. And so that narrowed my focus on who to go after. If I was to do this by myself and I hadn't joined that group, I most likely would have started by Googling, like, who's a good multifamily attorney in the Dallas market, right? And I may or may not have picked the right one, right? And it probably would have taken me significantly longer. So I'd say, leveraging mentors and people that have already done it will definitely shrink the time frame from where you want to go from point A to point B. And I believe that the money that you spend, some people have the capital to spend on that and some people don't, but if you do have the capital, I believe it's money well spent, because, if you pick the wrong partner, that could cost you way more money, or possibly an extra 6 months or a year to find your first deal, so.
No, I agree. And so many services can be outsourced to different vendors these days that really, you don't need that big of a skill set to get started. You just need the right resources. And that's why I think it's so scalable as a small team, and you can manage a lot of apartments, is because you could outsource a lot of the, property management, or like you said, the inspections and so forth.
That's a great point. One of the big, the big detractors to a lot of people is, I don't want to get into the rental business because I don't want to be fixing toilets and, dealing with tenants. Right. But on these larger deals, you have on-site, leasing staff, on-site maintenance staff, and you've outsourced the property management to a property management company. And so they're dealing with the day-to-day, and so I don't get a call when there's a new tenant signing, application being signed up, or if, there's an issue, they take care of it and then we discuss it, So I review the reports, I ask questions, I help implement the business plan and make sure we're on track. But the day-to-day is handled by the property management company. And that's what helps you give you the ability to scale.
So when you first started, how did you decide on what location or area you were going to start investing in first?
So I live in the North Dallas area, and, the DFW area has been an awesome, market for multifamily. Awesome in the sense that the returns have been very good over the last number of years, and awesome from the standpoint that there's a lot of multifamily apartment communities, in the DFW area. So I decided that I really like this market and I was going to invest here for a number of different reasons. One, I think it's a great market. Two, I wanted to learn. So I wanted to be able to drive to the property whenever, I wanted to. And in the beginning I was going once a week, and now I probably go once a month or once every 2 months. But I have kind of the view of DFW that Buffett has of the stock market. Buffett's like, look, I don't know where the stock market's going to be in 6 months or a year or 2 years, but I'll bet anybody 10 years from now, the Dow is going to be higher than it is today. Right. And I grew up in Connecticut. I lived in South Florida for 14 years and I've been in Dallas for 10. And I'm amazed at Dallas, and from the standpoint of, for a major metropolitan market, the cost of living is still dramatically lower than most other major metropolitan markets. And there's population growth. And so when I look at, the next 5-10 years, I have no doubt in my mind that there's going to be a ton more people living here than we're living here now. So with that, new people, new population, new jobs, new income growth is competition for apartments. It's competition for, housing. And so it should be a good market in my mind, for the foreseeable future.
So for all the people that are out there, searching for the right area to invest in, and obviously Dallas is a major core area that people are underwriting, to add assets to their portfolio, how does one keep a competitive edge to be able to get to those deals versus the other people? A lot of people show up at the same place, right?
Yeah. So, that's the challenge. If you want to be in a market that is a competitive market, it's competitive, so every deal, look, I got my first deal and then I partnered with 2 other guys that had a deal, and I was a very small minority partnership on that deal. But I've been runner up in the last year and a half, runner up 3 times. And it's competitive. Every deal in the DFW marketplace has probably 15 offers, 6 or 7 that go into best and final, or 5 to 7. And then there's always 3, 2, 3, 4 that kind of bubble up and are around the same price. And so the broker and the seller have to get together, and the seller's like, who should I go with? And so when I have conversations with people that reach out to me on Instagram about getting their first deal, I tell them, think about that conversation, think about that last conversation in that process, and how are you going to get them to pick you, right? Because the broker is always going to pick, a buying group that they're confident will close. So you, as the new person, they're not going to ever pick you. And it's just the reality of the world. They're not going to pick you unless you're partnered with a very experienced partner that has experience, or you way overpay on the property, or you put down, significantly more hard earnest money. Those are the 3 factors, really. So, If you want to overpay, you can go at your own. If you want to put down, everybody else is putting down $100,000 hard money and you want to put down 500,000, well, you might get the deal. But if you want to pay market price, where other people are paying, then you really need to partner with somebody that has experience on your first deal or even first two deals.
So do you believe that these type of areas will maintain also their lower cap rate or compressed cap rates compared to some other markets across the country over the next 5 to 10 years?
Yeah, I think that, okay, what do I classify as a strong market? Population growth, income growth, landlord friendly. So if you look at markets like that, Texas is definitely one of them, Arizona, Carolinas, Tennessee, Florida, certain pockets of Florida, South Florida, where I used to live, the cap rates are extremely low, almost like California cap rates. But so, with more competition and more money, cap rates will stay compressed for sure. But it also depends on the interest rate market, right? We just had, based on COVID, interest rates have gone down to all-time lows. And the Fed is saying that interest rates are going to stay there. Well, all investments are like relative value. So if all of a sudden it goes the other way and there's inflation and interest rates rise, well, cap rates will most likely rise with that because, why would you purchase a multifamily community if you could buy 10-year treasuries at the same yield? You wouldn't. So there's always going to be some kind of spread.
So how can investors hedge, I guess, cap rate risk 5 to 10 years out on top of them utilizing their IO loans right now or a 5-year period interest only to get that return that they're looking for internally? Do you see that a risk, 5 years out, and how can they kind of hedge that?
There's always risk at any particular time that, the market could be good or bad. And in my experience in the loan trading side is, people ask me that were in my personal network that invested in the syndication with me. They said, Darin, look, I know the market, but what's the risk in this? And I said, I haven't been through it on the real estate ownership side, but I've seen it on the loan trading side. And really the largest risk is the reset. So when you get a, residential, you buy a home, you get a 30-year fixed rate mortgage. Well, when you buy these apartment communities, they don't have 30-year fixed rate mortgages. So, most banks want to have, 5 years or less. And then Fannie and Freddie are kind of the most attractive loans from the standpoint that they'll do 10 and 12-year fixed rate loans and they're non-recourse. So a lot of people go down that path. So having a loan that, it has a long-term nature where you're not going to be caught. I think the worst place to be in a multifamily or commercial real estate investment is in a deal and the loan is going to reset in a terrible economy. At that point, the ownership group that would include the general partners and the limited partners in that deal have no leverage. And the bank or whoever the lender is on that deal, is going to say, yeah, that apartment community was worth 10 million when you originated it, but now cash flow is down, cap rates are higher, and that property is only worth 8 million. So, you guys got to come up with another 2 million in equity if you want me to refinance this. Well, you don't want to have that conversation, right? So to avoid that, if you have a 5-year business plan, but you put 10-year or 12-year debt on it, that gives you the running room to, get through, a more difficult economy and come out the other side and either sell or refinance in a better economy.
Okay. So for limited partners, is that, how do they kind of underrate the deal? What are some things you look for as a limited partner to underrate a deal before going into a syndication?
Yeah. One is, get educated. How do you get educated? You could join a multifamily group. You can read books. You could listen to podcasts. You can, I would suggest if you're interested in investing passively that you pick the market you want to be in, whether, say you want to be in Dallas or if you want to be in Charlotte, wherever you want to be, pick the market and then, get on the investor database of as many syndicators in that market as possible. And what happens is as these syndicators, go into contract on deals, they will then email you an opportunity to get on their investment webinar. Register for that. Even if you're not ready to invest yet, it's a learning opportunity. So, first step is you have to get on their list or you'll never even get an opportunity, an invite to that webinar. Secondly, once you get the invite to the webinar, register. There's no obligation to invest. Watch the webinar and learn from it. And as you watch more and more of them, you'll learn more about, how do they market these? And also there's a lot of times there's Q&A from other investors on the deal. And so you'll learn from that Q&A.
And with a 506B, you need to have a relationship with a sponsor prior to a deal becoming available, right? So that's where it becomes more important to register and establish that.
Correct.
And what are some key due diligence points that you look at when choosing the proper syndicator or the deal that they're investing in? A great indicate, look, past performance is not indicative of guaranteeing future performance by any stretch of the imagination. But, talking to other passive investors that have invested in a number of deals and asking them, who do you like as syndicators? That's a good place to start. And, so what does that mean? What syndicators you like, right? That means it means a number of different things. One is when they presented the initial investment deck, were the returns commensurate with what they said the returns were going to be? That's a great indicator that, okay, they understand how to underwrite these deals and manage them once they close. Secondly, what's the communication been like? Are you happy with the communication? I'm invested passively in 7 different deals, and some deals I get an email saying, "Hey, everything's great. Attach the reports, and that talk to you next month." And others they outline, provide a lot of detail. And I happen to be a type of guy that I like, to have them write out what's going on at the property, the good, the bad, and the ugly, because I don't want to open those reports. I don't want to have to analyze the balance sheet and the P&L for every investment I'm in. I'm counting on them to manage it. But I do want to understand at a high level, what's going on and whether we're on track. So, as you see more and more of those emails and more of those investment decks, you get the feel for, who do you want to do business with? Yeah, I've seen some sponsors under communicate or not do that good of a job, and then they're out there, still trying to raise capital. I think a lot of them, you got to take responsibility and over communicate to your LPs, and the LPs will bring other investors in if they're happy. I mean, that just happens. Word of mouth is the biggest way to get more investors into the deal. And you agree?
Yeah, I completely agree. Having said that, I laugh and I say, none of these deals have gone full cycle yet, right? And so the interesting part will be after they all go full cycle, the guy who was sending me the email, hey, everything's great, here are the reports. Like if his end return is better than everybody else, I'm probably going to give him a pass on the communication. But the ideal is that you have great communication along the way and a great return on the back end, right? So that's the ideal, and that's what I'm hoping to provide, and every syndicator is hoping to provide, and that's where you definitely get the word of mouth referrals.
So what do you see as the biggest advantages of being a LP in a real estate syndication?
It gives you diversification outside of being in the stock market. I mean, look what happened with COVID. I know right now it looks like it's a complete, V recovery, and maybe it will be. I'm a little bit more suspect, but even if it is, think about that, 2-week time frame where everything was just plummeting and everybody was glued to the TV, just watching their stock investments go down and down and down and down. Well, all those syndications that I'm in, they don't have ticker symbols. So I didn't have anything on my phone showing me my net worth, my investments just went from, A to less 40%, that happens with stocks, but it doesn't happen with these investments. Another thing that, it's real, it's tangible. It's not a piece of paper. It's you can drive to the property and see it. It's true people that are living in these apartments paying cash, and it's positive cash flow. Another big factor for me is, I saw this chart, and I'm not going to get the numbers exactly right, but you'll get the point. Fannie and Freddie are the largest lenders for multifamily in the country. And they had a chart that showed, I think it was either 60-day or 90-day delinquency prior to 2008. And it was like 35 basis points, ridiculously low. And that's delinquency. It's not foreclosure, right? So with them being the largest now, during the 2008 to like 2012 time period, when we went into the Great Recession, their delinquency went up, but it went up to like 95 basis points delinquency. So these guys are the largest lenders in the country. They have a ton of data to be able to pull from. And so if you underwrite a deal, okay, and then you're trying to get Fannie or Freddie a loan on it, and they come back with a loan around the same price as, level as what you were predicting, you've got to feel pretty good. It's just another safety guard, because they're not going to lend on deals that they think are going to go bad. So that's another safety factor is when you get a Fannie or Freddie loan, they've got a lot of data to look at. And so they're pretty smart in terms of making their decisions.
So you're saying basically the syndicators using their loan originators as another set of eyes to underwrite the deal for them.
Yeah. I mean, they make the decision. They're not going to get involved in a deal unless they feel confident, right? They've underwritten it. They've provided it to a lender that they're confident about. They've underwritten it. And now it goes to, say, Fannie or Freddie. Well, that's just another set of eyes and another kind of rubber stamp to say, yeah, you guys, you have a good cash flowing asset here. And we have confidence that this deal is going to perform.
Yeah. And you were also mentioning in regards to kind of the private placement or the syndication not being liquid or being tradable, kind of forces your hand to stay in there through turbulent times in the market and actually see the full business plan play out versus, kind of panicking and selling your allocation, right?
Yeah, it is a different animal because, with a stock investment, you can get in and get out whenever you want. And these private placements, it's typically like a 5-year business plan. Some syndicators say, we'll try to get out in 3 years. But if it's a bad economy, it may end up being 6 or 7 years, so you pretty much have to think about that money is like that money's gone for the next 5, 6, 7 years, that's in somebody else's hands. And, so you don't have the ability to sell at a really bad time. And that's, the emotions of it get to a lot of different people on the stock side. And, especially, well, I mean, just all different times, but, I hate to see people that are, have built up their nest egg, for their entire life. And then all of a sudden they're elderly about to retire, and then the market tanks, and then they sell, and like they're just crushed, so these deals don't really allow for that.
It's interesting because I'm seeing across, digital assets and the talk about tokenization, which, is trying to bring liquidity to these non-liquid markets, whether it be real estate syndications, venture, private equity, and so forth. And, sometimes I sit back and wonder to myself, are people actually doing better and making better returns because it's not, liquid and tradable? And will that kind of force people to be, more emotional and sell too early?
That's a good question. I'm not into the, the whole Bitcoin space yet. I think it's interesting and I'd like to learn more about it, but I don't know much about it.
I think the cadre, maybe I could be wrong, but cadre, I believe, was mentioning something about even having internally their shares to be able to be tradable after a 12-month period within their real estate syndications. So I guess we'll kind of see how it plays out in the next few years. But I think some of the advantages of not being able to is that you're kind of forced to hold it through the whole time.
Yeah. I mean, it's good and bad. I mean, right. I mean, I'm sure there's certain people that have invested in syndications and they have a life emergency that they weren't expecting, and they want to access the money, and, they can't, or it's very difficult to. And so that, you never know when you're going to need something. And COVID happened, right? There's some people may have had to tap into, retirement funds, and sell out of stock investments. So, there's always unforeseen things, but I think from a return perspective, I mean, in these, especially in these multifamily investments that, seeing the business plan through and not selling at an, inopportune time is critical.
And through your experiences, is there any things to look out for, any disadvantages of being an LP or bad experiences that you've had that someone can kind of keep an eye out?
Well, there are syndicators that have, I mean, it's an investment, right? So it's not a guaranteed return. And it's a pro forma, it's forecasted, returns. So there are certain syndicators that are, just trying to get as many deals as they can get. And sometimes will inflate, the numbers that they're saying that they're going to be able to provide. So that's where it's important to talk to other passive investors and try to really understand the reputation of the different syndicators and, be comfortable with who you're going to do business with.
And as a limited partner, do you advise them to kind of get a hold of the pro forma from the GP, the sponsor, and do their own underwriting on that? Or how far do you go?
So on every one of those investment webinars that, you register for and you look at before you decide whether you're going to invest or not, the syndicator should have presented you the business plan and the pro forma. If they haven't, then that's, I just haven't seen that before. But that, I guess that's possible. Some people could invest just because they want to invest with, a certain syndicator, but typically you'll see the pro forma. And if you haven't, yes, ask for it. Now some limited partners just don't have the education to be able to, make heads or tails of it, So as you look at more and more, you're going to get more confident. You're going to know what to look for. But I think the number one thing is finding people that like and trust. That's critical, and that ideally have a track record. Now, there's first time syndicators. I was a first time syndicator, and I had people invest with me. There's more. I think there's more risk with that, and that was one of the reasons why I brought a very experienced partner on as a GP with me, because I wanted to make sure I maximized returns for my investors. He kind of, steers me in the right direction. Most of the time he's like, Darin, run with it. But every now and then he'll be like, Darin, you may want to consider this, because he's been through it before. Right. And so he will, just provide some guidance that helps us, stay on track.
That was really good. And then I know that, I guess for all this over the last couple of years, at some point you started your own real estate investing podcast. Can you tell us more about that?
Yeah. So, at the beginning of the year, I had my goals, and one of my goals was to start a podcast. I didn't expect to do it until kind of later in the year. And in February, I was locked and loaded on like a 210 unit deal about an hour south of Dallas, and really thought we were going to win that deal. And we ended up coming in as runner up. And so, there's a lot of work is involved with underwriting these deals and going after these deals. And so I looked up to the big man upstairs and I was like, all right, what next? And the idea just came into my head, what about podcasts? So I Googled podcast conferences. I went down, found one the next week in Orlando. I booked a ticket and went down and met a bunch of people, not real estate related, that, I was like, I don't know how to do a podcast, how to help me out. And so I met a lot of great people that told me how to do it. And so all of a sudden COVID happened, and it ended up being a great time to really, buckle down and figure out the launch of the podcast. So I launched the podcast a few months ago, and it's been fantastic because just like this, we wouldn't have met had we not, been both on social media, and, you invited me on the podcast. It's a great way to meet other people in the industry that you wouldn't have met before. And, I interview a lot of people that, are further along than me, that have, 1,000, 2,000, 3,000 syndication units. And so I'm able to ask them questions like, how'd you do it? And hear common themes. And so it helps me to try to get to the next level.
So it's helped you build a lot of relationships in the industry that you're investing in today, and is making your ability to execute on those deals stronger.
Yeah, absolutely. It opens you up. Remember when I mentioned joining the multifamily mentorship group? Well, that exposed me to a lot of like-minded people that helped me answer some of the questions I had. Well, since then, I've met a lot of great syndicators outside of, the group that I'm in. And so, one person I met on the podcast, I just asked him a question. Hey, I heard you have this trip you do, and he's like, oh yeah, it's a mastermind trip. We have like, 20 or 30 people go, and he's like, why don't you come? And so when we got off, we talked about it, and I'm going. So next month I'm going to Jamaica with like 25, 30 people that some of them I know and some of them I don't. But it'll open me up to a new network. Another guest on the show, he talked about having a ranch, and I just happened to say, hey, my son loves the idea of owning a ranch one day. He's like, why don't you come down? So next month my son and I are going to visit him on his ranch. Who knows where that goes. But yeah, it's been great from a learning perspective and also from a relationship standpoint.
Yeah. So the ability to reach others throughout the entire community has made a great impact on what you're doing. Yeah.
I mean, it has a few different factors to it. One is, until I got involved we talked about it before, 3 years ago, I didn't know what syndication was, right? I didn't know you can get involved in these deals. So part of me starting the podcast was really, all right, I want to be able to tell more people about it, not just people I meet at a real estate conference, but I want a platform to be able to get it out there and let more people that know that they can get involved and how they can get involved. So that is one of the reasons why I started it, was to try to expose it to other people outside of my local market. And it's been great because I have people reaching out to me on Instagram saying, thank you so much for putting together the podcast. I really learned a ton from this episode, and, can we get on a call? And so I'm helping the next guy, and then I'm interviewing people that are ahead of me that, and some of those people will most likely, give me a hand to get to the next level. So we're all in this together, man. It's like the great part about it is this industry, people share, people help each other. And there's always somebody that's behind you, and there's always somebody that's further along,
Yeah, I guess with Jeff Bezos, everyone feels like they can level up, huh?
Yeah, I mean that's skipping a few steps, that's skipping a few steps. But look, hey, it's all in your. I believe it, man. I believe it's, like Napoleon Hill says, whatever you believe and can conceive in your own mind, you can achieve. And I believe that. I'm definitely a believer that. The first step is that you have to make a decision to go after something and believe that you can do it. And then you go figure out how to do it.
That's good. And is there any secrets to, editing the podcast or kind of production and how you get it done so quickly and smoothly and have the ability to be able to, have time to do it every week?
Sure. So like anything in life, there's, whether you buy a car or a house or whatever, there's different budgets, right? And so, you could start a podcast really inexpensive and, just record it and put it out. I was not an expert on it and didn't know what I was doing. And when I went to that podcast conference in Orlando, I actually sat through, a number of different sessions, and one of which I was really impressed with this individual, and when I talked to him afterwards, and I ended up hiring him as a consultant to help me launch the podcast. And he has a team that, I send the audio to him, and his team, they equalize it and make it sound great, and put all the intros and outros together, and then they'll also schedule the postings for me and stuff like that. So, but with all those things, there's an additional cost to it, right? So I thankfully for my, I have another business, and I've done well, financially. I have the funds to be able to do it. And I'm not really looking like, okay, some people have to start a podcast and they have to figure out how to monetize it right away. I'm not really looking at it that way. I'm looking at it, as a long-term, relationship builder and providing access to more people. But so I don't really have, monetization in the cards right out of the gate. But I have the cash to be able to, put this software and this software. Cause he's like, hey, we could do this, but you have to sign up for this software. I'm like, okay, no problem. How much is it? Oh, that's not a big deal. All right, let's do it. Then there's like another software application that's on top of that, and another software app. But what's important to me is freeing up my time, right? So if I can offload the technical side, then that frees me up to be able to spend more time doing podcasts with you, talking to people, to other investors, other potential partners and brokers, lenders, et cetera. So I want to be able to free up my time. And so as much as I can outsource, the better.
No, I agree. And I think, someone just asked me that yesterday about the podcast too. I'm like, look, no affiliates or no advertising or anything. I think it's just a way of building relationships. And it's one way to look at it is, it's kind of like monetizing it, because you're establishing relationships, and it's your network in your life that's going to help you level up and do bigger things. So I think that's a great way to look at it.
Yeah. So the relationships with people that you bring on the podcast, relationships with people that listen to the podcast. But in addition to that, so, social media, right? I wasn't on social media until about 3 years ago when I got involved in real estate. And now it's funny because, there are people that have never liked a post or commented on a post or anything, but I go play golf, and I haven't played golf with this guy in 2 years. And he's like, hey, Darin, man, I didn't realize, man, I've been seeing you. You've been, you're doing all kinds of real estate stuff. Like, I want to get involved on the next deal. And like, I had no idea this guy was even interested. Right. But had we not had a podcast, had we not been posting on social media, these other people wouldn't have known. So, what I tell people is, look, you got to get over the fear of putting yourself out there. And, because you're not doing it for the people that are there will be people that will judge you. Right. But you're not doing it for them. You're doing it for the people that wouldn't have found you. You're trying to help somebody else get into into this business so that they can grow their wealth. Whether they partner with you or whether they partner with me or they partner with somebody else, like maybe they were introduced to syndication through your podcast. And so to me, that's just being a great human being, is trying to help somebody else.
No, I agree. And documenting that journey allows, listeners and followers and friends, will call them, to like and trust you and build that up over a period of time. I think a lot of people can sometimes be short-sighted in how they look at, when they're talking LPs and so forth, that sometimes we like to watch what someone's doing for maybe 6 months, 3 months, 12 months, depending on the person, right?
Yeah.
And after a while, then you kind of build trust with that person. You get to follow what they're doing, and then you're willing to be invested in their deals. And so I think as a sponsor, you always got to, nurture those relationships for a longer period of time.
I completely agree. And the other thing I would say is, everybody, God made all of us unique. Each one of us is different, and each one of us, has the ability to impact others. And some people are going to resonate with you. Some people are going to resonate with me. Some people are going to resonate with the guy down the street. Right. So there's, it's an abundance mindset. There's plenty of opportunity for everybody. And some people are intimidated, getting involved in investing with somebody that's done 10 syndications. They're just too far removed. But somebody that just did their first one or is doing their first one, they're like, hey, I can relate to this person because I want to do that. And I'm closer. He's closer to where I am, so he's just one step ahead of me. So maybe I can learn more from him than from somebody that, they started 10 years ago. Right.
Yeah, I agree. And so as we leave off here for our last final question, what is the biggest thing that you've implemented in your life that has increased your net worth? Well,
it's not come completely to fruition yet, but I would say real estate. Real estate. I believe this is it's going to grow, my family's wealth dramatically over the coming years, compared to, socking away 10, 20% a year, out of either your W-2 income or your business income, and then hoping it's going to grow in the stock market. The other thing I would say is taking, for the listeners out there, whether it's real estate or something else, man, take a risk, plan for it. Right. So live below your means so that you can take some risk in your life. And whether that means starting your own business or getting involved in real estate investing, you may not be successful, but you'll learn from it. And then most likely, I've counseled a lot of people that have ended up going into business for themselves, and maybe the business turned out a little different, but I don't know anybody that went into business for themselves and then ended up going back to corporate. I don't. It's a scary thing to leave the safety net, but once people, make that leap, they're like, holy cow, I wish I did this sooner.
So what I got from that is that you're very confident that the next decade will bring a lot more millionaires that are invested in real estate.
Yeah, well, I didn't know it until I got involved with this group 3 years ago, but I see the quote over and over and over now that, 90%, I don't know where they get the quote, but 90% of millionaires were created through real estate. Well, look, I wish I had known that, back in my 20s or early 30s instead of 47, but I'm glad I know it now.
No, I agree. It's never too late, right? Never too late.
No, absolutely not.
So if people want to get a hold of you or learn more about your podcast, what is the best way for them to do that?
Yeah, I'd say the best way is to go onto my website, darinbatchelder.com, and that's spelled DARINBATCHELDER.com. There you can sign up, and once you sign up, you'll get access to all the podcast episodes and weekly investing tips and that sort of thing. If you want to reach out to me, I'm on all the social media, Facebook, Instagram, LinkedIn, etc. I spend most of my time on Instagram. So if you want to private message me, Instagram is probably the best place to reach me. And my name there is @Batchelder Darin.
Any reason why Instagram's your favorite? Everyone seems to have a favorite or one that they dominate on.
Exactly. It's funny because I was really reluctant to start. I didn't start on Instagram until about, a year and a half, 2 years ago. And my kids were laughing at me like, Dad, you're going to get on Instagram? Like, this is for young kids. And I like it because I've met so many great people from it. I don't know. I found that it's, I think everybody just has their favorites, and I've met a lot of great podcasters, syndicators, people that want to invest in my next deal. I've met lenders. Like it's just been a great place to share and connect.
Well, that's good. I appreciate all the insights you shared with us today. And Darin, thank you for coming on the show.
Absolutely, Joe. It was a blast. Thank you for having me.
Thank you. Hey, everyone. Thanks for watching my latest interview. If you like what you saw, please click the subscribe button below to become a member of the Joe Robert community. Be sure to hit the bell to turn on all notifications so you always know when I post a new video. Tell me what you thought about the content in the comments below. I always read them and would love to answer any of your questions.